You've probably noticed this. We've got a new Fed chair, and there's talk about rate cuts and rate increases, and your news feed is full of charts. But when you talk to a lender or see something on your weekly mortgage news update, your rate quote still has a 6 in front of it. Meanwhile, your friend just got 3 offers on their house, and another friend says the LA market is dead. So which is it? And what does this new Fed chair actually change for you if you already own in LA or you're trying to buy? I'm Keri White, real estate agent in beautiful Los Angeles, and on this channel, I share data-driven insights so you can make informed decisions whether you're buying, selling, or just keeping tabs on the market. On this channel, I translate the headlines into what's really happening on the ground here in LA so you can make sure you're making smart decisions, not just reacting to the noise. If this kind of breakdown helps you, hit subscribe and send to a friend who keeps saying, we're just gonna wait for lower rates. I mean, who doesn't have a friend that says that? Okay, so here's what we're gonna do in this video. First, what the new Fed chair actually means for interest rates in plain English. Second, how that trickles down into real mortgage payments and choices in LA. And third, a couple of real world scenarios, trading a small house for a bigger one and deciding whether to rent out a property or sell it and buy a home. A lot of choices out there. So by the end of this video, my goal is that you'll know whether you're truly stuck or whether there's actually a path forward for you with our new Fed chair. So let's get this Fed piece out of the way quickly, right? Yes, the White House is talking loudly about wanting lower rates. And yes, Wall Street is hanging on every sentence he says. But here's the part that really matters for you. The Fed moves a short-term rate that banks use with each other. Your 30-year mortgage is priced off what that bond market thinks will happen with inflation and rates over many years. Right now, the people who trade that stuff all day are basically saying, we don't see a return to the 3% world or even the 4% world. That's never gonna happen. So instead of a big dramatic drop, the best case for interest rates over the next year is gonna look more like this. Higher than what you want, for longer than you hope for, with wiggles around the edges rather than a cliff dive. And maybe even the rates will be pushed up a bit. That's not as fun, but it's honest. And if we start from that, you can actually make a plan. So here's how this shows up with real people, not just charts. A few years ago, a lot of LA homeowners locked in a 30-year rate with a 2 or a 3 in front of them because they either bought when rates were low or they refinanced. It's basically the majority of America that has a financed home unless they're cash. Today, most buyers are looking at quotes in the mid-6s. So you end up with a situation like this. Someone who bought a small house in 2020 with a 3% rate and a payment that feels totally manageable. Now they've grown, maybe they have kids, their life has changed, and the house feels tight, but every time they look at a bigger home at today's rate, the new payment can be double or even more, and it stops them absolutely cold. It's kind of why people might feel like the market is totally dead. Reactions like that. Or you have someone who bought a condo with a great rate and they have solid equity, and now they want a house, a yard, a different pocket, more long-term stability. And they're trying to decide, do we rent out the condo and buy a home, or do we sell the condo to buy the house? What works best for our particular situation? And then I get the message, okay, but what if we just wait for rates to drop and then decide? That's where the new Fed chair comes in. If the people setting policy and the markets watching them are telling you higher for longer, waiting purely for a rate that may not even come back comes its own risk in itself. You're not only betting on rates, but you're also betting that the right bigger house or the perfect home to replace your current home will be available at that exact same moment when everything lines up. Kind of like unicorn timing. Yeah, maybe sometimes that will work, but a lot of the time, it just doesn't. And think, how many people do you know who may be in your same boat? So I want to bring this down to 2 scenarios I see all the time in Los Angeles. So story 1, trading a small house for a bigger house. First, the small house to a bigger house move. very common. That's kind of the whole trade up process in life. So you think of a couple in a starter home, maybe in a smaller house in a good pocket. They bought a few years ago. They refinanced into a low 3% rate, and now they've totally outgrown it. This property does not work for them. When they called me, the questions were, if we sell this and buy a bigger place, what does that new payment actually look like? Is that jump worth it for the extra space in the neighborhood we really want? So we sat down and ran it 3 ways. Keep the current house and try to make it work longer. Sell and buy a larger home now at today's rate. Put that equity towards lowering the monthly mortgage. Or rent the home, buy the next home, become a landlord. Essentially, we map out what would need to be true financially for them to feel good in any of these scenarios. And in the end, they decided to move. Not because they were excited about a higher rate, but because they were honest about what staying would feel like with 2 kids, 2 jobs from home, and no real room to breathe. The payment went up, but so did their quality of life, and they could comfortably afford it. 6 months later, when I check in, the conversation is about the space, how it changed their life day to day. They don't talk about the interest rate, but they do ask, are those still at 6%? By the way, they were able to lock in a mid 5% rate because of relationship banking. Reach out to me for more about that. So the second scenario, similar situation, people in a good rate and they've outgrown it. So they look and decide, is this something that we can afford? Do we want to keep it? What do rents look like? So they decided they would go down the path of becoming landlords. They wanted to take that money monthly and apply it to their new house. So in order to get to that decision, we looked at these questions. What does the rent realistically cover? What's left over after HOA, taxes, maintenance? How does that affect what you can comfortably qualify for on a new house? And what about vacancy factors? If you sell the condo and buy the house, how much stronger is your down payment? And what does that do to your monthly payment and your stress level at today's rate? Which option actually fits your risk tolerance and your goals? And that's the most important part when we're strategizing on making these decisions. And I've had clients choose both. Some love the idea of keeping their home as a long-term asset and are comfortable with the extra moving parts. Others look at the numbers and they say, you know what, I'd rather roll this equity into the next house we really want and keep our monthly payment simple and our life simpler. The point isn't there is not one right answer to this. It's that in a higher rate world, you can't just follow a one-size-fits-all rule. You have to see what your actual numbers and your lifestyle are and that you're all on the same page. So what do smart buyers and sellers actually do now? For buyers, the question is all about this. So if rates are going to be higher for longer, does it still make sense to buy in LA? Sometimes the answer is yes, and sometimes it's not yet. If you're stretching to the point where one surprise expense breaks you, that's a red flag. If you're stable, you've run the numbers, and the home you're buying makes sense for how you live over the next 5 to 7 years, that's totally different. For sellers, especially people in smaller homes, the question is it worth trading my great rate for a bigger home or the house I actually want? The people who are moving now are doing it because the change clearly improves their life. More space, a better layout, a different school, different daily pattern, not just because they feel like they should. The new Fed chair doesn't change that calculus. He just changes the backdrop you're making your decisions in. So here's how I'd frame it if you and I were talking one-on-one. You've basically got 3 plays here. Move, trade up into that bigger house from a condo or a smaller house with a clear view of the payment because the lifestyle win is worth it and you can truly afford it. Stay, keep the low rate mortgage, commit to making the current place work. Maybe reconfigure the space, improve it, but stop living in a maybe we'll move this year limbo. Or hold, so you don't move right now, but you get crystal clear on your numbers, your target neighborhoods, and at what point the trade-off makes sense. So if that right house does appear, you're ready to act instead of starting from 0. None of these depend on a surprise rescue from the Fed. They depend on knowing your own numbers and what you actually want in your life in LA to look like. So if you're in one of these situations and you're wondering whether it's finally time to make a decision, trade up, keep it, sell it, whatever it is, reach out to us. Don't trust the headlines. You need an expert on your side while you make these decisions. When you do reach out, we'll go through that playbook together. We will look at your actual current loan payment, what it really costs to move into the kind of home you're thinking about at today's rates, what it looks like to keep or potentially rent out your home versus sell and buy, and what it means if you stay put and let this rate environment play out a little bit longer. So think of it as a short pocket strategy session and a rate lock reality check rolled into one. And the goal is never to talk you into listing or buying. It's just to get you out of limbo so you can make a decision you feel solid, and even if that decision is not yet. If you want ongoing, honest breakdowns of what's really happening in the LA market beyond the Fed headlines, subscribe to KeriTV so you don't have to decode this on your own. That's what we're here for. And feel free to comment below, reach out to us from the info in the caption. No matter your timing, we are always here for you.